So we were sitting around having a conversation about business loans, and we realized that a lot of folks don't have the full picture when it comes to business loans. So in today's conversation, I want to show you how to get a guaranteed approval, fair credit business loan for large amounts, up to $10 million. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you're all doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee, or tea, or vodka, and let's roll. In today's conversation, I want to quickly talk to you about how to get a business loan for a fair credit, guaranteed approval, and large amounts. Here again, the large amounts we are talking about up to $10 million in business funding. The thing here is that opportunity often appears when you least expect it, right? You're running your business and you all of a sudden see an opportunity. You want to expand your operation and you realize that you have some cash problems. So you need to think strategically here. And when it comes to getting the fair credit business loan for large amounts, you need to think about three things. And those are things that lenders also pay attention to. So number one, the type of lender. Number two, the personal credit score. And number three, the age of your business. So this trifecta is very critical. So the type of lender, traditional lenders have very strict requirements for loan approval. And most will require completing a multi-page loan application and providing 3 years or 5 years worth of financial statements and a business plan. And they might also look at both your personal and business credit score. So you will need a solid business credit history if you want to get approved with a traditional lender. So you might want to think about alternative or online business lenders. I'll speak about this later on in the show because those lenders typically have much more lenient requirements. For example, they may ask to connect to your accounting software or check your business bank statements. And if you meet their criteria, some alternative lenders will approve you within minutes. Personal credit score, that's the second part of the trifecta. So some loans will want you to have a minimum credit score of 600. So if you are between 600 and 700, you are in the fair credit category. So that you should be fine. You should be fine to be approved for a traditional business loan. And the age of the business. Some lenders will typically ask for 3 years or 5 years worth of tax returns and financial statements as part of your loan application. But again, there are some alternative lenders out there who are pretty comfortable with dealing with you even if you are a startup. So there are some factors you need to compare when choosing a loan. Think about the loan term. Okay, short-term loans are generally for 24 months or less. Mid-term loans are typically for 2 to 5 years. Think about the interest rate and the APR, the loan limits. It's harder to get a second business loan when you already have an outstanding loan. So try to get a loan that provides the full amount you need, so you will not have to apply for another loan. And think about the loan fees. And the lenders, keep in mind, the lenders consider your annual revenue, your cash flow, your current debt load, the business plan you are going to prepare, and the loan purpose. So this was a quick overview of the conversation. Now let me give you a step-by-step on how to get a guaranteed approval, fair credit business loan for large amounts. Number one, you need to check your credit score. Yes, I know. You're probably thinking that, you want to get a business loan with fair credit. Why should you check your personal credit score? You have to, because that personal credit score has an impact on your loan application. And so you need to check your personal credit score. You can do so actually for free. You have to go to a website called annualcreditreport.com. And once a year, by law, all the 3 credit reporting agencies, Equifax, Experian, and TransUnion, they are obligated legally to provide you with a free credit report. And you are also entitled to see your credit report within 60 days after being denied credit, or if you are on welfare, unemployed, or your report is inaccurate. You can also access your business credit reports. So when it comes to business credit reports, you have Dun & Bradstreet, the Paydex score. We're showing this to you on the screen right now. So this is this Paydex score from DNB. It ranges from 1 to 100, with higher scores indicating better payment performance. And this score is based entirely on payment history. So to earn the highest score, you must pay your bills before the due dates. And Paydex is primarily used by vendors and suppliers to judge your business when determining what terms to extend on trade credit, like net 30, net 60, etc. And then you also have the IntelliScore Plus from Experian. So with this, here again, the scores range from 1 to 100. A higher score logically indicates lower risk. So as a business owner, you want to aim for a higher score. And then we have the FICO Liquid Credit Small Business Scoring Service. And it's called SBSS. And this actually ranks applicants by the likelihood of making payments on time. And the score ranges from 0 to 300. So the higher the score, the better. So the scoring can use both personal and business credit data and other financial information. And a strong credit history at the business and at the personal level can actually help boost your SBSS score. The picture I'm trying to paint here is in the first step. If you're trying to get a guaranteed approval, fair credit business loan for large amounts, you need to know your credit scores personally and also business-wise, if you have one. Step number 2, you need to research your options. You want to look for a business loan that will give you the amount of money you need for the lowest cost and has a repayment terms that works for your situation. Very important. And there are several types of small business loans for fair credit, guaranteed approval, and large amounts. First, let's go with the traditional sources of business funding. You have business credit cards. Yeah, because using a business credit card not only gives you access to capital, but it can also help you improve your business credit scores if you make your payments on time. As a result, a business credit card can be a good financing option for a startup business or an established business with fair credit. Okay, this is very important. You also have short-term loans. So both traditional and alternative lenders offer short-term loans, which generally have terms from 6 to 24 months. I've said that before. So instead of a fixed monthly payment, some lenders automatically withdraw payments from your business's bank balance daily, weekly, or monthly. You also have short-term lines of credit, and those offer terms similar to short-term loans, except they are revolving credit, like credit cards, instead of installment loans, which require fixed monthly payments. So business owners often turn to short-term loans or short-term lines of credit when they need working capital to pay for expenses like payroll or inventory. You can also think about invoice factoring, right? So if you have a business that has unpaid receivables, you can turn those receivables into cash using factoring. And factoring companies buy your unpaid invoices from you for a percentage of their value, typically about 80 to 85%. And the factor collects payments on the invoices from your customers and pays you the balance on the invoice minus, of course, the factoring fees. Okay? And the value of your invoices, not your credit score, is the primary consideration for factors. You also have something similar, something analogous here. It's invoice financing. And it's kind of similar, but it's a little different. Instead of buying your invoices, the financing company advances you the value of the invoices. You are still responsible for collecting payments from your customers and paying back the loan and any related fees. And you also have microloans. You also have a merchant cash advance and equipment financing. If you need to buy equipment for your business and you have fair credit and you want a guaranteed loan, you can think about equipment financing, because this type of loan is used to finance the purchase of equipment using the equipment itself as a collateral. This is kind of like a car, that's for a car loan. So this helps to keep interest rates low, although those with fair credit will pay more interest in some cases. And equipment manufacturers are the best place to look for equipment loans. There are also third-party equipment lenders such as Currency Capital, CIT, and Balboa Capital. I'll be right back, right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. We are still having a conversation about how to get a guaranteed approval, fair credit business loan for large amounts, up to $10 million. The third step, so step number one, check your credit scores. Step number two, you want to research your options. Step number three, you want to write a business plan. Some lenders ask for a business plan as part of your loan application. And the cool thing here, and the one thing I want to say here is that even if your lender does not require a business plan, writing one is a smart move. So if your poor credit or a fair credit score stems from money management problems, having a well thought out business plan will help you from making the same mistakes with your business finances. And you can get a free advice on your business plan from expert consultants at SCORE, for example, or your local small business development center. SCORE stands for the Service Corps of Retired Executives. And you can even do it yourself. If you have a knack for business writing, you can actually write your own business plan. There are tons of templates on the internet you can download, and you should be fine. You can even use software like LivePlane or BasePlane. Those you probably have to pay about $15 a month, but they come with templates, built-in templates, depending on your industry and everything else that you need. And if you don't want to deal with that, just outsource the whole thing to someone on Fiverr or Upwork or a freelancer. Those are freelancing websites, or you can hire someone locally to kind of help you write the business plan. So you need to write a solid business plan to impress the lender. At a very minimum, there are 4 things you want to have in a business plan. You need to have the executive summary. This is the first section of your business plan. A lot of experts will recommend that you tackle it. You tackle that part at last because you need to write the whole business plan so that you can actually have the full picture, and then you can summarize the full picture into the executive summary. All right, so you have executive summary. You need to outline the opportunity. In other words, you need to talk about the problem you're solving, how your product or service fits into the current market, what sets your business apart from the competition. So outline the opportunity. Step number 2, you need to show how you will execute, right? Because if you think about it, this is where the action happens. Here you'll get into the details of how you will take advantage of the opportunity you outline in the first section. And this part demonstrates to banks and lenders that you have a strong plan to achieve success. And step number 3, you need to detail your financial plan. And this is actually the most crucial and intimidating part of any business plan for a bank loan or an alternative loan. Your prospective lender will look especially close at this section to determine how likely your business is to succeed. And the thing here is that you can actually, again, you can outsource this part if you're not really, financial statements are not your forte. Step number 4, if you're trying to get a guaranteed approval, fair credit business loan for large amounts, you may consider finding a co-signer. Why not? Right? Because the whole idea is to increase your odds of getting approved. So if you want to get a business loan, but you have a fair credit, see if you can find someone with a good credit score who's willing to co-sign the loan for you. Since this person is guaranteeing that they will take over the loan payments if you can. It is essential, though, to make sure that he or she can afford to do so, and that both of you are truly comfortable with their relationship, with the arrangement here. Okay, so, and one thing you need to understand here is that a small business owner looking for a startup loan should search for possible co-signers and be actually prepared to present co-signers if asked by the lender. And why a co-signer may be needed for a fair credit loan. A lender usually requires a co-signer when it needs more information or more security to be assured that the loan will be paid off. Banks may require a co-signer on business startup loans because the new business owner has no business credit history for the bank to rely on to pay back the loan. And who can be the co-signer? Again, it really, here we are speaking about the whole gamut. Really. If a lender says you must have a co-signer for a business loan, you may want to look first at family members or close friends, right? Because a co-signer at the end of the day should be someone you trust, but also someone who has some assets they are willing to pledge, and someone who has a very good to excellent credit rating. And one thing you need to understand about being a co-signer is that the co-signer doesn't just sign on the loan. He or she is making a promise to repay the loan if the borrower defaults. The co-signer usually is required to provide collateral in the form of property or other assets which the bank can sell to recover its money in the event of a default. The co-signer is required to provide a personal financial statements, and the co-signer's credit rating is checked and considered in the loan acceptance. The co-signer is required to pay late charges, fines, and penalties if the original borrower fails to do so. Okay, and one thing you need to know is that the co-signing process works in a very clear way. The applicants may be told by a lender that a co-signer is needed. He or she usually must have an excellent credit rating, or in the case of a fair credit business loan, personal or business asset that can be pledged in the event of default. The co-signer must go through the application process along with the applicants, must produce documents that verify credit rating or value of assets. Finally, the co-signer signs all loan documents asserting that he or she will honor the terms of the loan. The co-signer receives communications from the lender and is notified in the event that the applicant does not make payments in a timely manner. So this is kind of important you need to think about. Another way to improve your chances of getting a guaranteed approval, fair credit business loan for large amounts, is to consider providing collateral. If you have the financial stability, the required financial stability, consider providing collateral, because putting up collateral can improve your chances of getting a business loan with fair credit. If you can't repay the loan, the lender will take your collateral as payment. Avoid using personal assets such as your home as collateral for a business loan, because the last thing you want is, if your business fails, that you end up losing both your business and your home. Instead, you want to choose a loan that lets you use business assets like equipment or outstanding receivables as collateral. Okay, this is very important. And if you need a loan to kickstart your business loan, you have several options. First, you need to decide whether you want to apply for a loan secured against collateral or an unsecured business loan. So loans that are secured by collateral have a range of advantages. So you have higher chance of qualifying, you have more loan options, better payment terms, and lower interest rates. On the other hand, unsecured loans are not as paperwork as intensive, but they do have strict qualifying criteria. And the main advantage is that your assets will not be in jeopardy if you are unable to keep up with your payments. And so the process of applying for a secure loan can be daunting for someone who hasn't done it before. So here are a few things to keep in mind. Find out what you can use as collateral. This can be home equity, 401k, commercial properties, equipment, automobiles, accounts receivable and purchase orders, credit card transactions, and deposits. If you are talking about merchant cash advances, and then you want to determine how much collateral is needed for the loan you are applying for. Then you need to maintain detailed records of your assets value. Very important, because the value of the assets is actually underpinning the loan agreement, right? It's the collateral here. So the value is very important here. You need to evaluate the risks thoroughly. And at the end of the day, please do not be scared about negotiating. Don't be afraid to haggle. No, banks and lenders are interested in getting themselves the best deal. So you want to research viable alternatives before you go into any negotiation to give yourself some leverage. After all, you can always walk away and get your loan from another provider. So if you're not happy with how the lender evaluated your applications, you want to ask for a review, particularly if you believe your asset has been undervalued and you can support that belief with evidence. And another thing you want to do is be sure to consider other options. Please, you want to expand your options here. You can think about like marketplace lenders like Lendio, specialize in taking the hassle out of small business financing, right? So you can go to loan matchmaking places, Lendio or I'm blanking here. You have Lendio, you have a lending club, yeah. So you can think about those, or you can just go to an alternative lender. So it is very important to compare your options before committing serious collateral on a loan deal. That's just common sense, right? And one thing I want to say here is that And this is a pro tip in today's conversation. There are things you can do to get a business loan with better terms, because that's what you want really. At the end of the day, it's kind of cool to get a guaranteed approval, fair credit business loan for a large amount, but if you have crappy terms, you're not really winning here. So I'm going to show you here. There are 3 things you can do to improve your chances of getting a business loan with better terms. Improve your personal credit scores. Your personal credit score is important because if none of these loan alternatives provide a loan that fits your needs, if you can't get approved for a business loan that suits you now, don't give up. All right? Improve your personal credit score. You want to start by bring any late payments current as soon as possible, and you want to dispute any errors on your credit reports. You want to think about paying your bills on time, not just credit cards and loan payments, but also your rent, utilities, and phone bills. Don't apply for new credit accounts, or you can don't even close unused credit accounts, because either of these actions can negatively adverse your credit score. Finally, you want to work to pay down credit card debt and other revolving credit, and you want to make sure that you don't use more than 30% of your total available credit. That's the first thing. The second part of this trifecta is you need to build your business credit. So after you've made sure your business credit report is accurate and brought any late payments current, you want to work on building your business credit by getting credit and using it responsibly. Make sure any business credit cards you use report your payment history to at least one of the 3 major business credit reporting agencies: Experian, TransUnion, and Equifax. Very important. You want to see if you can get trade credit with suppliers. You want to ask them to report to the credit reporting agencies. Even a very low trade credit limit can help. So by paying your bills on time, you will help to improve your credit score and encourage suppliers to extend more credit. And the third thing you want to do is to reassess your business plan. You want to review your business plan to see if there are ways you can cut costs or increase revenues. And either tactic can help reduce the amount of financing you need in the first place, right? You can also ask lenders who turn you down to give you feedback on your business plan. So use what you learn to revise the plan and make it more appealing, more captivating to lenders in the future. All right, folks, this was it for today's conversation. We were actually speaking about how to get a guaranteed approval, fair credit business loan for large amounts up to $10 million. First, you want to check your credit scores, personal and business. You want to research your options. You want to write a business plan. It has to be captivating. It has to be clear and straight to the point. You want to find a co-signer if needed. And you want to consider providing collateral, again, if needed. And I give you a few pro tips about how to get a business loan with better terms. Thank you so much for your attention. I really appreciate it. I'll see you next time. But until then, remember, stay marvelous.